What's good, people? My name is CJ Soup, and today is the educational video of the week, and we're going to be going into the Model 1, the number one confirmation entry that fucking exists in trading, bro. Guaranteed. Basically, a Model 1 is an order block, but how we're going to talk about today, how we're going to talk about this order block, it's a very specific order block. It's a very specific candle that you can expect to work. A bunch of order blocks work. Yes, I do take trades off of like order blocks that are within the way up to the opposing end of the range, the initial fundamental concept of what we're trading, CRT, as well as what I've explained in past videos. The Model 1 is this specific order block down here. The Model 1, say if you want a bullish Model 1, is basically the order block. It's the candle that purged the liquidity into the key level, and then that's the market structure shift, the classic 2022 ICT model. This is when it actually works. That Model 1 or fair value gap, that's the Model 1. Very high probability confirmation trade. And I say confirmation specifically because me personally, I'm trying to take the soup. I'm trying to take the liquidity grab. The RR is better. It's a bit more of a flex. And just once you get good at this craft, because at the end of the day, like, we're trying to make money. But when you have a passion for this, like, you want to be able to catch like that crazy trade. You want to be able to catch what most people can't catch, because that's showing experience. It's showing maturity. It's showing skill. And money follows the skill. So I'm trying to get up the skill, if you get what I mean. So I'm trying to take the soup. But the next entry is the Model 1. And I still take the Model 1 entry. I take the KOD a lot as well. So that's what we are going to be going into today about the Model 1. So first we're going to be going into the theory. Basically, the theory is what's on the screen. The sequence, like I've said before, which I'm about to write down, is you have the soup, the Model 1, the OTE/breaker, and the KOD soup, the last soup, kiss of death soup, into the drawn liquidity. I'm now going to mark up an example on the charts using EU, where I can explain this theory a bit more practically. Okay, so we're now at the chart. I'm going to be going over EU and a very solid example of a Model 1. This was from the week of Monday, the 13th of January until the 17th of January, which was, I'm recording this on the 26th of January. So not this past week that's just gone by, but the week before that. Great example of Model 1. But Model 1s are literally everywhere. So that's the OTE there. And then you have the KOD. Very nice example this past 2 weeks of this concept. So following the same logic from my past videos, we're going to mark the weekly range open and the weekly low. So we got the weekly open on the Sunday, open low, soup of the previous week's low, which is actually there. So the last down close candle that took the low would be these two thick specific candles there. If we go into the 8-hour, still not a singular, 12-hour maybe. On the 12-hour, it's a singular down close candle. This specific candle is the Model 1. Not any other like order block, like we don't know. Like this specific candle. Seen best on the 12-hour, but we trade the 4-hour. So you can treat it, because a higher time frame order block is just a lower time frame breaker. I've said that before. That's the facts. So we got a 4-hour breaker, 12-hour Model 1/order block. Same thing. But this is a actual high probability order block that works. It's basically an order block that took liquidity, basically. So this is the Model 1 here. Down there, market structure shift above this white candle here. Got a couple closures, back down, and now it is treated as support, making price continue upwards. So that's the theory. Now I'm about to spit some gems right now. So this is a rough what you can expect when it comes to time frame alignment of the CRT, the range, low to high, high to low that you're expecting, with the time frame that you can expect the Model 1 to be found on. So I'm going to type this up so it's a bit easier to see. So if you have a monthly CRT, you can expect a daily Model 1. If you have a weekly CRT, you can expect a 4-hour Model 1. If you have a daily CRT, you can expect a 1-hour Model 1. If you have a 4-hour CRT, you can expect a 15-minute Model 1. And lastly, because this is the lowest time frame CRT you should even be considering, I wouldn't even say consider unless you're an extreme expert. I would be sticking to the daily and the weekly for now. But for the last one, 1-hour CRT, you can expect a 5-minute Model 1. Now, these are rough. These are rough whereabouts where you can expect price to... is what you can expect, right? Because as I showed before, in this certain example, the 12-hour had the thick singular one singular candle order block, right? The most visually pleasing. But the 4-hour still had it there, just in the form of more of a breaker, 2 down closed candles. But on the higher time frame, it's 1 candle, right? So it's all fractal, but that's what you can kind of expect. So this is a weekly range open low to then come back in the range to then continue to the upside. And you can expect, if it's a weekly range, that roughly a 4-hour order block Model 1 will present itself, which it did, and support a price to continue to the upside. But like I said, a bunch of order blocks work. So specifically because it's all relative, when speaking about the actual range, since it's the weekly range, this is the Model 1, but then up here, this is an order block, if you know what I mean. It's just the terminology. Since this was for the whole narrative play, this is the Model 1 because it is the order block that took liquidity. It's the most down closed candle at the most lowest relative point in a bullish situation. But then you have continuation order blocks, because if you're moving bullish and you're respecting bullish PD arrays, down closed candles should be supporting price up. Just like if we were in a bearish scenario, up closed candles should be resisting price down. And that's also how you can probe order flow, which is one of the 4 key components to a high probability trade. The first one being order flow. Are we bullish or bearish? On what time frame? Right? So that's the example on EU. I'm going to find one more example on indices because I want to relate it to my free PDF, which is in the description. If you want to have my model that I use in the futures market daily, which got me a 50K Apex eval 2 weeks ago on a video that I've posted in the past, previously a couple weeks ago, then that link is in the description. And I'm going to be relating the Model 1 to my model that I show on the PDF, so you can get a bit more in-depth context, right? So let me go find a recent model from the past, I don't know, within the last 2 weeks. I'll find a solid one, and I'll explain how to use SMT when it comes to that model. So let me go find that. It's just so crazy, bro, because like it's too easy. Like I didn't even want to mark it out. I literally just open NQ. Like this is where we are. I'm recording this on Sunday the 26th. This was the past week. So not last week, but the week before. Just like with EU. Bro. Right there. Clear as day. Like it's too fucking easy. So same thing. You got Sunday open there. Weekly open until weekly close. Just running through this so everyone can be reminded of how you should actually fucking trade. So you got the candle that is the most down closed candle that took liquidity there. Use that as the Model 1. Boom. And how do you relate that to SMT? Well, I got ES found beneath. There is the SMT there. And that's how, because obviously we can see that the candles dug quite deep into the Model 1 4-hour Model 1 candle. So how can you determine when to actually say, okay, bet, execute? Like when do you? Well, as soon as you see that the S&T has appeared. So the best time to take this trade would actually be in the 1400 candle. After NQ purges this low again within this candle, you see that the 10 a.m. 4-hour candle wicked down to then close above, respecting this, showing that it's respecting. And then this candle then opened high, low again to then take it out. Or I guess I open a little bit high, low, and then high close, right? For the next day to then send it. So there you go. For an SMT to be valid, it has to be within a PD array. Write that shit down, because that's the main thing that like kind of fucked me when it came to trading futures. Because I've known about SMT. I've been trading how I trade SMT on that free PDF for a while, but how I've made it a lot more accurate and high probable is when I put the PD array first. PD array comes first and then the SMT. The PD array has to be there for the SMT. Don't be taking no SMT unless there's a PD array accompanied and associated with it. Just don't do it. Save yourself, bro, please. Like, are there some times where an SMT works and you don't see a visual PD array there? Yeah, but more times than not, just wait for the PD array. You'll be a lot more consistent and more stress-free and more selective. Okay, so, I mean, shit, like, it was kind of easy to explain the Model 1. It's a very simple concept, but very, very effective. So, yeah, man, I mean, shit, like, that's about it. Following the same frame that I was explaining in past videos of how you should be looking to trade. You should be trading based on a weekly perspective, a higher time frame perspective. You know, if you just come in trading the 1 minute time frame, like, you might get cooked. Like, I've gotten cooked. You know, I've also passed accounts with it, but less stress, more consistency is looking at price from a higher time frame perspective, bro. Looking at time, which is open high, open lows of different time frame candles, right? So short and sweet today. That's the video. Very simple concept, but very fucking effective. If you would like my free PDF, if you would like to learn more, I have a Discord and a community that I am building where I'm going to be spitting more game that I've been spitting on YouTube, bro. Like, I ain't gonna lie, you got everything you need just from the videos that I've made already. You just need to put the work in. But if you want to get my consistent thoughts on the market, outlooks on the market, live executions, breaking down past executions, then I have a Discord. So on that same link that you can find the free PDF in the description, you'll find a link to join my Discord and my community where I'll be spitting fucking game. Right now, the community is quite small, so obviously you'll be having more one-on-one attention, and I will make you a fucking profitable trader, bro. Psychologically and technically. Everything that, like, this is how you fucking trade, bro. All the big dogs on fucking YouTube and shit, it's all bullshit, bro. Like, most of it is bullshit. Not all of it, but most of it. Obviously, I had to learn this from somewhere, but I can tell you right now, I've been trading for coming up on a year and a half, and 6 months of my trading journey was just finding the right people. You know what I mean? So, like, and I feel like everyone kind of has to go through that. Like, it takes a little bit to find the right people that actually are teaching what actually works, but that's just part of the journey, like, and that's fine, you know. If you don't get through that part, you won't make it. But I'm one of the real ones. If you don't believe me, then take my concepts, take what I'm teaching, and go find it. Because right now I'm showing you this past fucking 2 weeks, bro, on 2 different assets, what I'm teaching works on 2 different assets, bro. So, I mean, like, fuck, you tell me, bro. I don't know, but yeah. So, until the next video, which will be a psychology video on Thursday, right now I have the idea of doing a video. I was writing some notes before in my content notebook on things to be talking about and game to be sharing without giving away absolutely everything, but, you know, what you need. I'm going to be going over why swing trading and short-term trading is better than scalping, which is basically what I just explained before. You should be looking at price from a weekly, higher time frame perspective if you actually want to be consistent over a long period. So until that video, please take notes on this. Please go back test this, and happy trading. And until the next video, peace.